All right, guys, welcome back to the Home Expansion Podcast, where we help you expand your mind, expand your life, and expand your territory. I am your host, Moses Rosales, listing specialist of the Home Expansion Real Estate team. Excited to have you guys here and really give you guys information on one of the most important topics, to purchase anything in the U.S., especially real estate, right? So credit. So whether you're buying your first home, refinancing, or planning to invest, your credit can either open doors or hold you back. So today we're breaking it down with someone who's been transforming credit for years. And actually, I have a personal testimonial myself from this guy. So I have Anselmo Moreno with Innovating Credit Solutions. Now, he's not just fixing people's credit scores. He's about building financial confidence and helping everyday people unlock real freedom. So if you ever wonder what really impacts your credit, stay tuned. Tune in. Ask us questions on the comment sections. We'll definitely get back to you. But if you want to build, rebuild, and leverage your credit, this is the episode for you. So thank you so much for being here. Anselmo, welcome, brother. Welcome to my Home Expansion show, brother.
Hey, man, I'm excited to be here. Thank you.
Thanks, man. Many years we've known each other.
Long time.
Long time.
Kind of flies.
I would love to start with the most story that I start with every single time, anytime you and I do something together. I actually myself years ago, when I purchased my first home, my credit was roughly about 550, right? And it's always been at that 550 range. And I really didn't ever really pay attention to my credit. Didn't really ever understand credit, I tell people that I bought things when I was like 15, 16, 17 years old, and I would just write my name and I would get things, right? Like remember CDs? Remember the CD?
Yeah.
All those things, and I didn't know. I just did things, and then obviously years later, as an adult, I became a little bit more responsible, and I wanted to purchase a home. I went to go get my credit checked, and it was 550, nowhere close to even becoming someone that can buy a home. So actually at that point, I knew who you were, right? Because we've met before that. I heard about you, but I wasn't a big believer of credit specialists, to be honest, at that point. So yes, I was very worried. I was very like anti credit specialist, but because I knew you, I was like, okay, I'll guess I'll reach out to him, and I did, and I can tell you right now that it was one of the best decisions I've done in my life is reaching out to you, man, and listening to you, and going through that process. Because even when we did our interview, for you to kind of look at my credit, you said, hey man, you can do this on your own, and I was like, cool, I say less, and I did, and I went, and I literally, I think I came back crawling and said, dude, it didn't work. And you looked at me and you said, it didn't work. I was like, nope. You said, yeah, see, this is where I come in. And I was like, perfect. And that's when I handed over. And you gave me a timeline. You said, hey, in this time, if everything works correctly, it would be at this. And literally, I'm not going to lie to you guys, literally on that date, my credit was where it needed to be. And I purchased my first home. So if I've never said it to you, thank you, man. Thank you for that, man. Thanks for really, pouring into me at that time. And because of you, we're here. The Home Expansion Real Estate team is here because we believe in what the product that you put out there, man. So thank you so much, man.
Dude, I thank you for that's always a great intro. I really appreciate how you are willing to share that, when introducing me to somebody, whether it's like a colleague or a client or even, your audience. I got to tell you, likewise, that I still have the DM, dude, when you slid into my DM and said, hey, I'm going into real estate full time. And I was like, damn, dude, that's a ballsy move. It's not easy, and then look at you now, And so also I admire the tenacity of how far you've come, because I feel like I watch you and Maria like grow, into this powerhouse real estate team. So congratulations on that success too. And I remember the case that you're talking about specifically because it was hard, like dealing with that collector that was giving you a hassle, and that's all it was. I mean, ultimately, I think that credit specialists, that word, or credit repair people have kind of earned a bad reputation, unfortunately. I think a lot of industries can a few bad apples can kind of spoil the industry, and credit repair, unfortunately, is not immune to that. And they've always kind of had this, people have been getting scammed by credit repair people since the beginning, and that is probably more prevalent now with social media than it ever has been before. And I've always tried to do the right thing and, just guide people correctly and just shoot them straight, because I've been doing this so long that I already know how most stories are going to end. When I look at a credit report, I already know how hard it's going to be, how easy it's going to be, and how that story is likely to end. And so that experience is what allows me to guide people correctly and more importantly, set the right expectations, right? I set the expectations for you at the upfront, and I tend to do that like almost every single time. And I'm also not like when I say you can do it yourself, it's because I'm not there to sell you. I'm not going to close you, right? I'm not a car salesman. Like, my job is to educate, and if I can be a part of the solution, let's work together. But most people that talk to me first, like, my main goal is education. Like, that's always the goal. Let me educate you. Let me help you understand how this works. Let me help you play the game.
Nice, man. And, thank you so much for, I'm obviously also admire or, acknowledging what we've done, man. Maria and I have worked hard, and credit has always been an impact to our business success, because believe it or not, when we talk about credit, people feel pressure. When we talk about finances, people feel pressure, right? When people talk credit, it's like talking politics and religion. You never ask somebody, hey, what's your credit score? And they look at you, right? I always say, I can tell somebody's credit score by how long it takes them and how they respond about their credit score, yeah? Because if you ask me, hey, what's your credit score? Like 770, 750, above 700.
Yeah.
Right? 600s.
Sometimes.
Yeah. And then below that is always like, oh, I don't know. It's been a while since I checked it. I really don't know. No, that's a good question. No, I don't know. So it's like, how people respond. I know that people feel pressure, and it's like almost like a identity thing for people. It's like credit score, right? Which is the craziest thing to me, right? That we identify with our credit score, but it's just how things work. So I feel like people feel the pressure, especially in today's world, credit score. So let's get straight into it, man. And how does credit score really affect people in their purchasing power? Not just in real estate. We'll talk real estate right now, but just as overall. Like, how do you see a credit score overall for somebody?
So, I think we got to back up a little bit and kind of talk about why do we even have a credit score, right? Like, okay. What was the credit score trying to solve?
Mm-hmm.
And pre-1970s, the way that people decided to give you credit and on what terms were based on what your skin color was, your last name, your gender, right? And so there was a lot of discrimination with credit. And that's when the Equal Credit Opportunity Act was technically formed around the civil rights movement. And they said, you know what? We can't be deciding credit terms and giving favorable loan terms to people of a certain skin color over others. And that's where they said, all right, well, we need to come up with a way to fairly judge people that doesn't belong any of these protected classes, right? Race, gender, religion, all the protected classes that were in play back then. And that's how the credit score was technically formed.
Yeah.
In order to have what they called it, an empirical, unbiased way to judge somebody and their ability to borrow money and pay it back. And that's what the credit score technically was born, right? It was supposed to solve this discrimination problem when it comes to lending.
Okay.
So we solved this one problem, and then we installed this other problem. And it's supposed to be a fair way to not discriminate when handing out credit. And it's supposed to essentially be like your adult report card. So now we're going to take a look at how you've borrowed money and paid it back before to determine, are you likely to borrow this money and pay it back in the future, right? So it's supposed to be this statistical way to decide, yes, you're a good risk, or no, you're a bad risk. And that's how the credit score was born. And so now, through this this model that won't discriminate based on the protected classes, now we have this model that's supposed to decide how are you going to pay the money back, whether you're borrowing a car or money to buy a car, borrowing money to buy a house, a credit card, a personal loan. And then next thing you know, now they have it for a bunch of things. Like some states use it for car insurance. California doesn't, but many states do. Renting a house,
Yeah.
they'll always look at your credit score. It even got to the point where they were looking at it for jobs, right? And so credit became this like central part of American society. And to this day, it's basically how they're making decisions on whether they're going to let you borrow money or not on the fly, because now it's scaled, right? Now you go to the mall and immediately the decision is made at the cash register whether they're going to give you the credit or not. And it's all just based on the number that you generate, your report card, your adult report card.
Okay.
So that's how we got here. And through that, it created a lot of problems because it just, the problem now is access to the correct information. Some consumers kind of grow up privileged with access to the right information to understand the credit system a little better. Like you hear this, I was never taught credit.
Yeah.
People, I hear that all the time.
Yeah.
And so, a lot of us had to kind of learn credit as we grew up. And then now we kind of know, and I feel like we can instill that to other people, instill it to our kids a little better. Like hey, this is how the system works. But still that disproportionate education and access to information when it comes to credit is probably the biggest problem right now, because people just simply don't understand or misunderstand the credit system.
Got it. 2 questions to what you said right now. Number 1, report card. So what is a great report card? We know like school, A, B, C, D. Yeah. So what is a great report card? What's a medium report card? What's a bad report card?
Yeah. So, I mean, just to kind of keep it in perspective, the highest credit score on most credit models is going to be 850, right? So that's going to be 100% perfection. That's very difficult to get and it doesn't really, so we'll just say that anything above an 800 is an A plus.
Okay.
We'll say that anything above 740 is an A.
Okay.
And anything above 700 is an A minus.
Okay, got it.
I'd like to establish. I just made that up right now, but it's actually super accurate.
And we got it on camera.
Super accurate. And then so going into the 600s, that's how we'll develop our Bs, right?
Okay.
High 6s, probably B plus, mid 6s, B, and low 6s, B minus. And then once we get into the 5s, that's where we get to the Cs. High 5s, we'll say C plus, mid 5s, probably C minus. I can't. Yeah, and then
maybe
so on and so forth.
Yeah.
And D's, that D's and F's are going to be sub 5.
Yes.
And so that's a good way to kind of think about it.
Lowest credit score you've experienced or worked with?
So the lowest credit score on most models is technically 300.
Okay.
And I've seen like a 340s a few times.
340s. Wow.
And so, yeah, I mean, it is hard to get one of those. I mean, I felt like, man, but life happens. We don't judge people. Like life happens and we figure it out. But what's it doing, right? Like what's a 300 score? What's a 400 score? Like, what is that? And so all that is that this person is going through it right now. So if I see a 400 credit score, I don't even need to see the report to know like, hey, you're past due on bills right now. Like if I look at your report, your car's late, your credit card's late, your mortgage is late. That's what a 400 score. You're late right now.
Okay.
A 500 score is you were late last year.
Oh, okay.
You see what I mean? And so that's the real difference between those scores. It's when did it happen? The 600 credit scores, you were late a couple years ago. That kind of a scenario.
Yes.
A 700, 800, like you've never been late. There's no lates on the report at all. You can't be an 800 with a late payment on the report. And so when I see a 400, I don't necessarily like think bad of the person, of course not, but I immediately know like there's a financial issue right now. They're going through a financial situation right now. And so sometimes it could be like, well, I co-signed for my sister, brother, cousin, and they're not making the car payments. Yeah, well, they're late right now and you have a 400 right now because of it. And so we got to fix that.
I love that you said that you don't judge people based on their credit score because you understand it, but because it doesn't define who you are truly. Like you said, it really depends on your life and what's happening at that very moment.
Absolutely.
Which also means, though, that you could be at 300 today and then be at a 500 in a couple months and then be at a 600 definitely a year later, right?
Yeah.
Makes sense because of the
that's
repairs.
how it works.
Yeah. So I love that you say that because we all go through that. But I feel like we all go through cycles in finances, in work, in business, economics, inflation, right? So we kind of see that. So, and then another extension question to that. I know you talked about the 800. I think that before you told me that an 800 is not easy to come across because it takes a lot of things for an 800 credit score. So for somebody to have an 800 credit score or 850 credit score, what are some of the things that have to be like in place for somebody to have that?
Yeah. So for sure, nothing negative, right? So you can't have an 800 and have a late payment 5 years ago. Like they don't go together. So someone in the 800 has not had a late payment for at least 7 years because the credit score history goes back 7 years. So no late payments, no derogatory marks of any kind. But also, and this is where, um, even though age is not supposed to be a factor in credit, this is where age in some way does come into play. Is that you got to have like 10 years of average history, like a credit report that's been around for 10 years, right? An average age of history of about 10 years to really be able to hit that 800 mark. You can't have credit for 2, 3, 4 years and have an 800 credit score. They don't really go together. So sometimes it just happens because you're old enough to have had credit for 10 years and you've been managing it well for 10 years. And this is why like grandmas and grandpas always have an 800 credit score because they have 30 years of credit
30 years,
and it's been excellent, for at least as far back as a credit can go. And so, yeah, you'll always see grandma and grandpa have a great credit score, but also grandma and grandpa are just generally more financially like stable, disciplined. They don't spend money they don't have. They don't use credit as extra money. So there's a lot of these like habits that come into play once you, I think, are older and wiser, that you're not going to buy something that you don't need or buy something that you can't afford just because credit allows you to do it. And so these traits are sometimes visible in younger people too. Like I see it in younger people, but they're consistently, you just kind of see them, I think, with wisdom over the years. You realize it and you make better decisions.
It kind of goes hand in hand with one of my favorite sayings. You learn in your 20s, you earn in your 30s, you build in your 40s, but then you live in your 50s. And that kind of like goes with what you're saying with your credit score. Like, hey, like you gotta learn in the beginning to get the credit score running and going, and then you really start earning. Now you expand that credit, right, by getting higher credit cards, access to better credit, and then really start multiplying and using that credit to help you scale a business, multiply in real estate, leverage, credit lines to be able to build some more. And then obviously you start living in your 50s if you can really do it.
And I think that really you can see it in our average client age, because our average client is 20s to 30s, mid 20s, mid 30s. That's going to be, we don't have too many 50-year-old clients.
Exactly. Okay, cool. Next question to this is, how is credit report when you want to go buy a car, furniture, a credit card, or even a home? Is it the same? Is my credit score the same for all of them? So if I have, let's just say I have a 750 in Credit Karma, is that a 750 for all, or does it change? Everybody looks at my credit differently.
Yeah. So one time, many years ago, I saw a guy with a license plate, and it said 740 FICO, and I just remember thinking and looking at it and going like, which version? Because there's so many versions of the FICO score, and now there's even Vantage score, and so I want you to think of it as like a math formula. This, and we hear a lot about the algorithm nowadays, right? Like the algorithm, the social media algorithm. Well, an algorithm is a math formula. And so FICO is literally an algorithm. And these different math formulas are made to predict different risk. So let me give you an example. If I'm a bank and I lend money for cars, I care how you pay your bills, but I really care how you've paid your car bills before, right? So if I see that you have had credit cards go to collections, but you have 3 paid off car loans and they've never been late, your auto loan score is going to be pretty strong, right?
Yeah.
But your credit card score is going to be kind of crappy because you're not good with credit cards, but you're like excellent with cars. So in this version of the auto loan score, you rate high, but if you apply for a credit card, on the credit card score, you'll rate low.
Got it.
So you have these different models that are developed for the different industries, and the mortgage model has its own model, and the same concept. They really care how you pay your bills, but they really care how you've handled real estate bills before. So if you had a foreclosure, mortgage lates, you're always going to be low on that model compared to what you see on your Credit Karma model, because they're rating different things. There's literally probably over 50 different scoring models at play at any moment, because there's just so many different industries, especially now with buy now, pay later loans and credit card loans, personal loans, auto loans. And then they update them every few years. So you have different generations of them. So the point is, there's not one score. There's many, many different scores. And if you have a good credit score, you don't care which version they're using. You're solid no matter what. You're not going to be, like, hey, well, which version are you using? Because I'm good here, I'm not good here. No, like, strong credit is strong credit regardless of the model.
Got it. So there is a lot of noise out there for credit repair right now.
Yeah.
And if you haven't followed Anselmo Moreno, Innovating Credit, you need to follow, because he's sharing a lot of this noise, and you're hacking them, which I love, right? And I think I sent you some stuff like, hey, what about this one? Hey, what about this one, right? And there's a lot of people saying some crazy stuff, man. And we all know, and I know, and you know, that they're just all about the views and the clicks. Unfortunately, people are gonna say whatever they need to say. But what is the biggest or craziest red flag, or maybe the craziest thing you've heard, out there, said by somebody? If you want to call them out, this is your opportunity. You don't have to. But what's the one thing that you've heard that it's just what's not real? You just want to say, look, I want to put this on record. Say this is fake. This is not real.
Ooh, man, where do we start? So the number one problem right now is that it is the saying is, once a bank sells your debt to a debt collector, you no longer owe that debt because you didn't give them permission to sell it. Like that is a whole bunch of nonsense. And it sounds good. Maybe at first you're like, yeah, I didn't give them permission to sell my debt, but it's just not how it works. And it's just based on nothing. Like, it's just not even a shred of truth to it. So that's probably the biggest problem, because what happens is you owe Capital One money.
Yeah.
And now Capital One sells it to ABC Debt Collector, and you didn't like that. You did not sign up with ABC Debt Collector. You didn't sign a contract with ABC Debt Collector. So I don't owe ABC Debt Collector, even though Capital One sold them the debt, right? So that's the argument. That gets people into a lot of trouble. And that's just that's not the way that it works. But if you want to hear that, if you don't want to have to pay your Capital One back, that information, if you want to hear it, right, then you might fall for it because it's something you want to hear. And I think that's the problem. All this noise that's being made is meant to capture people that want to hear that.
Yeah.
It's like that confirmation bias. If you're looking for this piece of information, you're going to find it, whether it's right or wrong. If you want to search why I shouldn't pay a collection, you will only find reasons not to pay the collection, because it's what you're looking for. It's just the way that the internet is nowadays. And so that's probably the number one problem we run into. And it's wrong.
Yeah.
And people, and it gets the most views. Yeah. Like, literally, if you go any social media platform and you search, not paying a collection, it's going to have the most views when it comes to the credit repair space. And it's just like fundamentally flawed.
Yeah. The one that I've seen that really gets me every time is, credit specialists, individuals talk about, I just removed some remarks from my clients, and now their credit score went up by 50 points, 100 points, right? Can you legally remove negative remarks from a credit report?
Yeah.
And if so, right? And if so, I mean, which ones? Because not all of them.
Yeah.
Yeah.
So there's this. Okay, so the whole point of credit repair is to remove negative remarks from the credit report. Like, that's what it's supposed to do. The problem is that, and I think this is just kind of goes the problem with the industry in itself, is in order for you to be a real estate agent, you have to meet a minimum standard. You have to pass a test, right, and work under a broker. Like, otherwise you are not allowed to practice real estate legally, right? And so credit repair doesn't have that metric. They don't have that bar. Like, you can just become a credit repair specialist tomorrow if you want to, with no formal training, nobody giving you permission to do it, nobody testing to see if you're even like have the right skill set or background to do it. Like, you can just do it tomorrow. Yeah. And so that low barrier of entry is what's a big cause of problems in the business, in my opinion. And so that's number one. But number two is, because the system has been, there's some loopholes in the system that have been discovered and are being exploited. it's causing some interesting things. So right now, here's what's happening. So right now, there's two credit repair scams that are prevalent, big time, and it's the identity theft claim and the victim of human trafficking claim. So con artists have figured out that if you claim identity theft or if you claim that you're a victim of human trafficking, the bureaus will wipe out every negative item from your report. So if you have somebody that's unlicensed, that doesn't have, a proper business, that they don't have anything to lose, yeah, they're going to put themselves at risk and file a fake police report and make a false declaration of victim of human trafficking. The bureau, by law, by statute, has to remove all those items when you make that claim. And then as things develop, or as things like the truth comes out, some of these items will come back on the report. But that's how you're seeing a lot of these, what they call credit sweeps. So when you hear somebody doing a credit sweep, it's just simply a false claim of identity theft.
It's kind of almost just going through the investigation period that your credit kind of goes up, but then it can come right back
Yeah,
down.
but it's a crime because you have to make, under penalty of perjury, a police report where you swear. Yeah, and the client doesn't know that this is happening. The credit repair person does it for them. There's been many, many cases of over the country, across the country, of people getting caught and put in jail for making these false perjury. They perjure themselves, and so that's rampant right now, and it's a problem because then you'll have like a legitimate credit repair person come in and say, "Hey, look, we're gonna have to negotiate these debts. We're gonna have to pay them some of this money back. You borrowed it. You agree with it. All right, cool. Well, we'll make a deal, cut it in half." And we'll go on our way, right? We negotiate that it comes off the credit report and we'll keep it moving. And then you have this other unlicensed credit repair person coming in and saying, you don't got to pay nobody back. Just pay me this amount of money and next week everything will be wiped out. So all of a sudden, it sounds better to a client. Like, I don't got to pay nobody back. All right, cool. Well, let's go down this road, not knowing that there's a crime being committed under your name.
Got it.
And so that's a huge problem right now. Very, very big. It's rampant. And I don't know how the hell they're going to stop it.
Now, question though, if let's just say I'm a client and goes and I end up with somebody that's doing this to me or is helping me do this, right? And it says, hey, let me sweep it, let me get it up, get that credit strong. Can I go buy something? Can I all of a sudden qualify and all of a sudden come back and then realize that the investigation was fake or something happens, right? I mean, can I get in trouble?
Yeah, of course. I mean, these declarations of penalty of perjury, like the credit repair person goes to the police and makes a false report under your name. They don't go to the police saying, "Hey, I'm ABC Credit Repair and I'm going to report this crime." No, they go to the police because if I'm going to file a identity theft report with the Bakersfield Police Department, I go online and do it.
Yeah,
I just go bakersfieldpolicedepartment.com. I'm a victim of identity theft. Let me tell you what happened, and you make it's all online, so it's not like they're exposing themselves like that.
Yes. Well, they're not physically walking into the police station. Here's my ID.
And most police departments across the country are like that.
Question. So if someone's recovering from bankruptcy, late payments, and collections, what's the realistic timeline for somebody to fully recover their credit score?
Okay. I like that question. Okay. So, and it goes with the number one question. No. The number two question we get asked in credit repair. So the number two question we get asked in credit repair is, how long is this going to take? The number one question is, how much is this going to cost? But let's start with the number two question, which is how long this is going to take. And with regards to bankruptcy, right? And I want to clarify that we're specifically talking about a Chapter 7 bankruptcy, which is the most common bankruptcy. Bankruptcy is a tool that we have in our tool belt of eliminating debt. So when you have debt, in our tool belt, we have bankruptcy. That is one of my favorite tools to use to eliminate debt. Next to that bankruptcy tool is going to be debt settlements and debt negotiation with debt management plans, right? We have these tools available to us to be dealing with debt. Bankruptcy is one of my favorite because it gives people what they're looking for, which is typically a fresh start. And bankruptcy is extremely misunderstood and underutilized, okay? People come in and the bankruptcy is the last thing on their mind because they want to, but when they realize that they can buy a house 2 years after filing bankruptcy, all of a sudden now it's like, wait a minute, just 2 years? I can buy a house 2 years after bankruptcy? Okay, it changes them because it has this stigma of, oh, well, I can't do anything for 7 years. I can't do anything for 10 years. So I don't want to wait that long. No, you can recover from a bankruptcy the day you walk out of the bankruptcy court with everything discharged. You'll have people tripping over themselves trying to give you a credit card
Right
because
away.
right away. So a bankruptcy takes 4 months typically from start to finish. You file in October, by February you're good to go, right? Meaning that in February, 4 months later you can start getting credit cards, building credit again, reestablishing yourself without the burden of all this debt from the past, right? Whatever life happened, job loss, layoff, divorce, like you fresh start. 2 years after that, you can qualify for a home. You can easily have a 700 credit score 2 years after a bankruptcy, right?
Really?
Yes. So just imagine that you're in a program to pay off your debt for 4 years and you're just struggling every month making this debt payment for 4 years. And the bankruptcy could have just hit the reset button. You would have been done in 4 months, and 2 years later you could buy a house.
Wow. Yeah. So bankruptcy is not as bad as people think. Then, and sometimes it is an option. Like you said, sometimes you're that individual who wants to pay things, who wants to be obviously diligent with their money, but sometimes you gotta hit that reset button. And that's what bankruptcy is all about. Okay, cool. I didn't know that. But why do you think that when somebody files a bankruptcy, automatically people like creditors like target them to get credit? Why is that?
They're not being targeted. You're a better risk. So if you owe 50,000 bucks and you want me to let you borrow money, like, nah, you owe 50,000, you can file bankruptcy tomorrow and then I can't get none of my money back. But if you already filed bankruptcy, your credit score is better. You're less risk because now you don't owe 50,000 anymore. You got no debt, and you can't file bankruptcy again for 8 years. So if I let you borrow money after the bankruptcy, you're not going to be able to file bankruptcy on me tomorrow anymore. You can't file for 8 years.
Yeah.
So you're a safer bet. You're a safer borrower. So that's why people are targeted post bankruptcy, because they're just less risk.
Yeah.
And so they got more disposable income because they're not saddled by their debt, and they can't file bankruptcy again for 8 years. So that's typically why consumers are going to be targeted post bankruptcy to borrow money again.
Yeah.
And it's weird because they're kind of like, never again. I ain't never having another credit card in my life after this. I'm done with debt. Well, unfortunately, you got to play the game if you want to participate. So if you want to borrow money for a house or a car, you're going to have to borrow money for little things to show that you are responsible. So what are we doing? We're rebuilding your payment history. But that's very common, and people have this, misunderstanding of bankruptcy. I've never told someone directly, hey, you need to file bankruptcy. But when it comes to dealing with debt, you have three options. You're going to pay your way out. You're going to wait it out, meaning you're going to wait the 7 years, or you're going to file bankruptcy. Those are the only three ways to get rid of debt, right? And as we lay out the options, if bankruptcy is the right one that makes sense for their family, it's going to be immediately obvious, and people will pick it as their preferred debt elimination strategy because it's just the one that makes the most sense once they understand the pros and cons of every three of those options.
Let's talk about some of the nationwide issues right now that we're facing. Right. I always say when real estate's high, Anselmo Moreno is maybe not that busy, and we connect. But when real estate's low, I feel like Anselmo Moreno's extra busy. Is that the case you feel sometimes?
No.
No? You think you're busy constantly no matter what's happening in real estate?
So maybe, so I've been doing this 20 years.
Yeah.
And maybe 10 years ago, I realized that there's new young people making bad credit decisions every year.
Okay. Let me ask you this question then. What generation is suffering or struggling the most right now? Because I know you're about to go into like the younger generation. What generation is struggling the most right now?
Our younger millennials and our Gen Zs.
In what way and how?
Because they inherited this inflation problem, right? So our younger millennials, maybe that didn't get a chance to buy real estate because they were on the younger side of the millennial bracket, and then Gen Z because they just kind of came in and everything was where like the post-COVID inflation happened, and they were just they hit the job market. They hit a tough job market. They hit a tough real estate market, and so I see them struggling the most.
Okay.
You have to realize that my business is about seeing people that are either struggling now or were struggling recently. And my job is to help them put things back together. So I see their struggles. And that's what I'm seeing for sure.
When it comes to like Gen Z's and obviously millennials, is debt the biggest issue for them right now?
For sure.
Or do you think like nationwide as a whole is debt like our biggest issue right now?
Yeah, yeah. I mean, what happened is debt became easy to get. Debt was cheap. Debt was easy, and all of a sudden, people have $10,000 credit cards that it wasn't normal to have a $10,000 credit card. It wasn't normal to have $1,000 truck payment. Like that
Oh yeah.
wasn't normal.
Yeah.
If I saw a credit report and the payment was four figures, right? It was 1,000 or 1,500. I'm like, damn, you're driving like a Lambo. What is it, right? Now it's just a truck,
Yeah.
right?
Mamalona.
You know, and so it's like, so this like making this standard, making this normal is, I think, the problem, because now you have these big monthly commitments, and even though they have maybe steady, strong income, they just don't have the bandwidth there to take on a mortgage loan.
Yeah.
Right. And so that's the problem. Plus, also, inflation over the last few years caused people to literally buy groceries and live on credit cards. And that's a problem, because now we're saddled by high interest credit card debt that they can't even. You could have people are waiting for the real estate market to crash. And I tell them, it crashes tomorrow and you will just watch it because you're not ready to buy.
Love that,
You
man.
know?
I constantly remind people of that. When people tell me, hey, I'm going to wait. Okay, let's pretend that you're going to wait and that tomorrow the real estate market crashes. What's your credit score?
Yeah. Yep. You'll
Oh,
just
so
watch it.
Yeah.
You'll just watch the great deals go by, and
How's your
you'll be
savings
stuck.
account? Do you have a job? No. Low credit scores. I'm like, well, like you said, you're just going to watch it go by and you're going to miss it.
Yeah. So stay ready so you don't got to get ready.
Yes.
Right.
Yes.
And so we always want to just kind of preach that to people, so that, okay, fine, let's play your game. It's going to crash. Are you ready? Right. Because if it is, you're not ready. And you don't know when it's going to crash, if it is going to crash, so just stay ready. In that way, I guess if your wishes come true and it crashes, you're ready to go. But people have been waiting for it to crash for 5 years now.
Do you feel like the concept of buy now, pay later? I think we see that more a lot. There's companies like Affirm, Clay, I think, or Carla, I think it's called. Buy now, pay later, and they're using these things for groceries. They're paying these things for like the necessities, or even just big purchases. Right? I see that constantly when I'm buying things. It says Affirm, buy here. Do you think that that's also causing issues to the consumer and credit and all those things, or are they reporting to the credit bureaus too?
So they started with not reporting to the credit bureaus, and that's what was enticing. That you could technically borrow money and it wouldn't hit the report. I'm like, all right, fine. I mean, if you're going to let me pay this in 4 and it's not going to hit my credit, it can't hurt. But then they all decided to start credit reporting. So now, dude, I saw a $60 Affirm account on a credit report, and the client forgot all about it and got a late payment. Wow. So whatever they bought for $60 ruined their credit because they got a late payment. And so that is a big problem, because it's making it easy to spend next week's money now. And that's the problem.
Yeah.
Well, as soon as you make that easy for somebody and they're not disciplined enough to spend next week's money now, or not spend next week's money now, then we just have little payments here, little payments there. And next thing you know, that's the first thing to go when you're in a financial trouble.
Yeah.
Well, I'm going to stop paying all these payments because I got to put food on the table, gas in the gas tank. And now your credit score is ruined over whatever you bought.
Regardless of the interest, even when they tell you zero, interest, this is still putting you on the same boat. Tomorrow's money.
Yeah. I mean, if you don't have the money for it now, don't buy it. I think that's the lesson here. And yeah, I mean, look, it life happens, and I think if the unexpected happens and your car breaks down, and the only way you can put this car back together is maybe to use credit to get yourself back on the road, life is going to happen, and that's one thing, and you can't predict that. But people know intuitively, they know, like, I shouldn't have bought those concert tickets. I shouldn't have bought them in the front row, right? Maybe I should have bought them, but because of Affirm, I bought them in the front row. And so these these impulse buys, these bad decisions start to compound. And
So
it happens.
it's a strategy then from these companies. Then
Yeah.
they're like, hey, look, affirm it,
Upsell.
upsell.
That's
It's
why
an
they have.
upsell.
That's why.
Yeah,
That's why it's on
it's an
every
upsell.
checkout line.
Yeah, it
Because if
is.
you go buy a Peloton, right?
Yeah.
Well, now I'm gonna buy. I'm gonna upgrade it. I'm gonna buy the best one with all the bells and whistles because I'm gonna affirm it. When you just wanted the basic one,
It's an
right?
upgrade tool. Wow. Affirm, Clara, or whatever it's called, it's an upsell tool. Man,
Yeah.
man. So before we wrap it up, Anselmo, for someone listening to us right now who feels overwhelmed, embarrassed about their credit score, what is the first thing they should do?
Look at it.
Look at it.
Yeah.
Okay, awesome. Look at
Because
it.
they'll bury their head in the sand. I don't even want to look at it. When was the last time you saw your credit report? I stopped looking at it months ago, a year ago, because I don't like what is there. No, but we got to look at it because the credit report will tell us almost everything that we need to know about what we're going to do.
Okay. So obviously bringing awareness to what you have, what you owe, what needs to be worked on.
Yeah.
Right?
So the credit report will tell you what's there and more importantly, what's not there. Because sometimes there's stuff that you think is on the report that's not there. Like if you think medical collections, oh, I'm going to have a bunch of medical collections. Surprise, they're not going to be there.
Mhm.
Right. And so having a good inventory, like the credit report is a list of your problems. And you look at your credit report, you get this list of your problems, and then you create a plan. Right. And that's what we do. We over the phone or in person in our office if you want to come in, or over Zoom if you're not local, we will go through your list and make a plan for everything on that list.
I love that.
And that's how we fix it.
I love that. Take inventory, set a plan, and take action.
Yep.
And you'll be on the path to better credit. Finally, how can people connect with you and your team if they want to have professional help like I did, right? And have results like I did? How can they get a hold of you?
So definitely our website is bakersfieldcreditrepair.com. Check us out there. And then on my social media at Anselmo 2004. You can find me there on Instagram. And call us 661-369-8130. And we'll be happy to answer the phone and set you up on an appointment and go from there.
And I know that you're on TikTok. I know you're on Instagram. So make sure you also follow because I follow you and I watch your stuff. And it's good. I'm telling you guys, it's good. There's a lot of content out there that I'm like, man, they need more eyes on this, like literally, man. And your content, it's good content, and it's literally you're debunking a lot of stuff. You're calling out the truth, which is good. I love that, because we have to call out the truth. There's a lot of people that don't want to hear the truth, but the truth is important because it will set you free.
Yeah.
Literally, it will. So, what an incredible conversation, guys, with Anselmo Moreno with Innovating Credit Solutions. Remember, credit isn't just a number; it's leverage, it's freedom, and it's the key for your next opportunity. So if you're ready to take the control of your credit, make sure that you guys call Anselmo. Make sure that you guys reach out to Anselmo. Comment below if you need his information or his Instagram or whatever. Comment below. We'll get that to you over so you can make sure that we get you on the right track. And if you're prepared to buy, sell, or invest, reach out to the Home Expansion team. Visit us at www.homeexpansion.com or DM us directly here on Instagram, Facebook, YouTube, TikTok, wherever you're watching this. Just give us a DM and we'll get you guys going. So if you value this episode, please subscribe. Number one, follow, leave a review, leave a comment, tag a friend, right? Who's ready to grow, who needs to see this. And always remember that when you expand your mind, you expand your life and you expand your territory. So thank you so much. Until we'll see you next time. Keep growing, keep learning, and keep expanding.